morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. You can see the opening bell right there at the New York Stock Exchange. And to that end, we have a jam-packed week for you here at Yahoo Finance, headlined by our star-studded annual Invest event on Thursday. More on that spectacle in just a moment. Investors awake to some movement on the government shutdown front. The path being charted to the longest shutdown in history, ending possibly this week. Well, that's good to hear. But it's by no means a done deal, despite markets thinking it is. Let's head over to Yahoo Finance senior reporter Brooke DePalma at the NASDAQ to see what's moving here in the early going. Brooke, a little optimism on this shutdown possibly ending.
Good morning, Brian. Definitely a lot of optimism heading into this trading session this morning and this new week after the NASDAQ saw its worst week of weekly losses since April, since that Liberation Day. And taking a look at the YF Interactive, I see the open now up about 1.5% moving into this trading session. Definitely over the past 5 days, though, we did see that pullback about 2%. And so momentum moving into this morning, now rising in the early innings, up more than 1.6%. Just behind it is the S&P 500. It also saw pullback last week. Now we're seeing the S&P 500 move higher, up just about 1% in the open here. And the Dow slightly behind that, up about 0.5%. But I do want to go straight to the NASDAQ heat map because once again, that is where we saw the biggest weekly losses led by some of those key names like NVIDIA and others. NVIDIA now seeing a pop of this open as this momentum, this optimism returns. That stock up nearly 4% at the open. Also, Tesla was another one that saw a bit of a pullback over the last 5 days. We're now seeing some momentum there, up nearly 2.5%. Also others, Palantir, AMD, Micron, Amazon getting a nice pop at the open. And I do want to take a look at Bitcoin because we did see a pullback in Bitcoin over the last month. And this morning, we're now seeing some return to momentum there. Bitcoin now moving higher as well. Taking a look back at that, Bitcoin now moving higher, up about 2.7% at the open. And if you take a look over the last month, what we saw was that pullback of more than 6%. And now we're seeing some risk-on appetite return to this market in this early morning, up nearly 3%. Ethereum also seeing more than 3% pop, followed by Ripple, Dogecoin, others also seeing some nice momentum at this morning, really showing that this optimism is returning after this government shutdown. Seems like we could be getting an ending here, and potentially the return of some economic data could leak through as well.
Love me some optimism. Thanks, Brooke. Appreciate it. All right, the two things I'm tracking this morning, the government shutdown and AI stocks. First, a new 31-page bill to end the government shutdown was released and then quickly advanced by the Senate on Sunday evening. It was the most direct sign yet that the record-setting shutdown could soon end. The breakthrough saw 8 moderate members of the Democratic caucus join with Republicans. We are seeing a risk-on tone in markets as a result, as Brooke just mentioned. But keep in mind, these 3 key notes. 1, this is not a done deal by any stretch of the imagination. 2, get ready for an avalanche of economic data that may paint the economy in an unflattering light, especially with the jobs market. And 3, the lack of data suggests it's not a slam dunk. The Fed cuts rates at its final meeting on December 10th. Meanwhile, I'm on high alert for an AI stock bounce after last week's absolute dread. AI stocks like NVIDIA and Palantir shed more than $820 billion in market value last week. NVIDIA earnings on November 19th could be the next big catalyst for the sector. Lots going on here. Out of the gate on Monday, the opening bid roundtable is here to help. Art Hogan, B. Riley Wealth Chief Market Strategist, alongside Yahoo Finance senior reporters Brooke DePalma and Nez Ferre. Art, coming out to you, as always, good to see you, man. Little optimism here on the potential for this government shutdown possibly ending this week. Are investors forgetting that prior to this, the economy was slowing down, notably the job market, the data sucked?
Yeah, I would tell you this, Brian. I think you bring up a really good point. I think the most important part of the government reopening, notwithstanding the fact that TSA and flights will likely get a lot smoother on one of the most important travel periods, is that we're going to have economic data. And in the absence of economic data, you've got a Fed that had been leaning towards taking a pause at the December meeting, and likely, if we compare the private market data that we've gotten on employment and what we will likely see before the December meeting, I think the Fed's still going to be looking at a scenario where they need to defend their full employment mandate more than they have to be concerned about their inflation mandate here and now. And I think that's why, if there's a major impact on markets with the government reopening, one of those pieces is going to be real economic data in real time that gives the Fed enough evidence to continue along the path of cutting rates.
No, real good points there. I'm of the view that markets are going to be reminded very quickly why economic data is so important. But let me just stay with you here. What data have you been using to assess the economy? And what are you telling clients?
Well, I'll tell you this, it's unambiguously a labor market that has slowed precipitously, and an environment where, for at least the last 3 months, we've seen corporations being slow to fire, but slow to hire. And that took a massive shift last month, where we saw Challenger Gray come out and show a significant increase in the number of layoffs announced. And there's been a lot of corporate announcements. So I would say that what we went into 40 days ago with the government shutdown was an impression that while we're not creating as many jobs as we did a year ago, and certainly not enough to keep unemployment from rising, we know that slow to fire has just picked up a pace. And I think that's going to embolden the Federal Reserve to start thinking about continuing along the path of getting rates back to a much more normal or neutral level.
Brooke, there's a barrage of data just waiting to come out.
Brian, that's right. We're hearing some rhetoric across the street this morning that barrage of data could be out soon. We know that September report was largely ready to go before this government shutdown started. And so Krishna Guha over at Evercore ISI saying in a note this morning that he does expect the unpublished September employment report. He said it's ready to go. And should the shutdown end in the next few days, they should be able to obtain that October payroll data. And that could come out almost immediately. In addition to that, Goldman, we also got a note from them that says if the BLS decides to release the October employment report, we expect its release along with the November report either on schedule on December 5th or delayed by 1 week. Of course, this government shutdown, we have lacked that economic data. We're supposed to get this CPI report this week. That is not expected to happen, even if this government shutdown ends. And so the hope is that we will get this data in the next few weeks by early December, right ahead of that key FOMC meeting.
Inez, it strikes me that any clues on the job market will be absolutely market moving. I've been doing this for a hot minute. I know I still look pretty young, but I've been doing this for a while. And I have never seen a Challenger Gray report like the one we saw last week suddenly move the broader stock market. I mean, this is a third-tier report at best.
Yeah, and also that Challenger Gray report noting the second cited reason why companies are cutting jobs is because of AI and automation. So if you needed any proof that AI is having an impact on jobs, then you look no further than that report. Also, Fundstrat noting last week that the ADP report showed that financial services jobs contracted, business services contracted, but you saw trade, healthcare jobs going up. So definitely there does seem to be an impact of AI in the labor market. And the big expectation is that you are going to see a deterioration once this data comes out, and that the Fed, as Art said, would have to defend that part of their mandate.
And as I love these robot videos that X is surfacing with me, I guess I shouldn't be surprised. It's an Elon Musk-owned platform, and he's making robots. Last week, we see a robot video of Optimus after his pay package dancing around. But you still see the robots, a couple videos out there, that they're trying to cook breakfast. They can't do it. They run through a mirror, and they break the mirror. And this stuff is wild. But this is more, I think, chatbots taking jobs.
This does seem to be more chatbots taking job, or perhaps also companies saying, look, we're automating. We maybe don't need this many people. Maybe we thought that we needed more headcount, and we think that we don't. I mean, there's anecdotal stories and evidence that you see in the business world. But when you start to see it in a place like the Challenger report, and then when you, of course, yes, you start seeing these robots that Elon Musk is showing off, and you start to think to yourself, this is happening. We are on a path where we are going to be automating pretty much everything.
I'm going to contain myself because I could spend another half hour talking about these robots. Art, back to you. Maybe along the lines of robots. We saw a big sell-off in all AI stocks last week. Not a good week for that trade. Are you a buyer here this morning?
I am, but I think the sell-off, Brian, was much more noticeable in the hyper speculative end of the AI trade. So what do I mean by that? I think you look at the newly minted but yet to be profitable quantum computing names, or some of the small nuclear reactor publicly traded but not profitable companies there. I think the sell-off was very orderly in the sort of Mag 7, if you will, in so much as they're still trading at, call it 35 to 40 times a reasonable valuation for the kind of gross margins that they have and the pace at which they're growing both revenues and earnings. But I think it was a much sharper sell-off on what we like to refer to as the hyper speculative edges of the artificial intelligence trade, which we've been trying to avoid the entire time.
Art, I was thinking about this over the weekend a little bit on these magnificent seven names. Back 10 years ago, we would think 40, 50, 60, 100 times earnings was expensive. But just given their competitive advantages, the cash they generate, how far they are powering the economy, are we just likely to see new levels of ever higher valuation? What is overvaluation with these names? What does that even look like?
Yeah, Brian, a million years ago when we used to use a PEG ratio, I think it would be a better way to
price to earnings growth, Art, yep.
Yeah, so if you look at that, then and layer on top of that the kind of gross margins that these Mag 7 companies throw off, and their earnings growth and revenue growth, I certainly think it's a different place, and you should compartmentalize that. And I would say if you took that cohort out of the S&P 500, instead of trading at 23 times, we're trading at 18.5 times. So there's a reason that the 10 largest mega cap technology companies trade at the valuations they do. And there's also a reason why the average stock is nowhere near to being as expensive as the S&P 500 index is.
And as next big catalyst for AI, I actually say two. One, this Invest conference, because we got Palantir CEO Alex Karp at this event. I'm jazzed up to hear from him. But it's NVIDIA earnings on November 19th. As always, NVIDIA has a high bar to clear, and they have to clear it, and they have to clear it by 5 country miles.
Yes, and now we did get sort of a preview with that Jensen Huang speech down in D.C. a couple of weeks ago, where he talked about the business in the books for Blackwell, $500 billion. I mean, that's just astronomical growth. Citi came out with a note also of raising their price target to 220 for NVIDIA and reiterating their buy rating, but basically saying that supply is the bottleneck, not AI demand. And also underlining one point that Jensen Huang had mentioned, and also the Citi note mentions as well, all of these assumptions for NVIDIA are excluding China. So it's still assuming zero sales for China. So look, it's just astronomical growth across the board.
Brooke, like I mentioned at the top, big sell-off last week in AI stocks. I'm thinking maybe that was a little bit of a bubble burst.
Brian, what we saw last week was definitely investors sort of pulling back because of that heightened risk of a bubble. And certainly the momentum that we've seen in these markets, as Art had mentioned, have just seen tremendous returns year to date. And we definitely saw some investors fearful because we also saw it in that sell-off when it comes to Bitcoin. Gold stayed around the same momentum, that 4,000 threshold as well. But definitely some fear that that bubble could pop. But largely what we're seeing now this morning is call-outs from UBS, call-outs from Morgan Stanley, as well as an Oppenheimer, that it wasn't necessarily the start of more declines, rather a bit of a haircut, a bit of a trim back, and the momentum is expected to persist into year-end and 2026.
Art, last word to you on this. Like I mentioned at Invest for us later this week, we're going to talk to a lot of folks making waves in the AI space. What do you want to hear from a CEO of a highly valued AI company right now?
3 things you need to hear. Your CapEx plans, do they continue apace? Do you see any pullback there? We haven't heard any of that. Return on invested capital. When does this become profitable for you? And give us a projection there. I think the last is how you rationalize this in terms of where you are in that paradigm of getting from the beginning, which started 3 years ago, to the end, the ultimate goal of the generative AI.
Art, Brooke, Nez, stick with me. We got a lot more popping on this show. Now, we're nearing a big day here at Yahoo Finance, our annual Invest event. Our teams haven't slept in months as we have put this special one-day investing celebration together. This Thursday, November 13th, starting at 8 a.m. Eastern from our New York City studios, we've got a full special day of live global coverage of the key themes driving the market, AI, crypto, and much more with the top people in corporate America you will want to hear from. We'll be talking to Pfizer CEO Albert Bourla, fresh off his $10 billion battle for weight loss drug maker Metsera. He is just one of the big names planning to be in attendance. Questions for our esteemed guest are now open and flowing in on the Yahoo Finance community channel right at the top of our homepage. Some of the questions we have already gotten are absolutely awesome. Keep them coming. Don't miss Yahoo Finance Invest live all day on Thursday, November 13th. Save the date and tell every single one of your friends. Welcome back to Opening Bid. You wanted to call the day, and I have it for you. It's Tesla, the company that handed Elon Musk a $1 trillion pay package last week and showed off dancing robots at an after party. Gotta love that stuff. You have to check out the videos on Musk-owned X. William Blair analyst Jed Dorsheimer sticking with a market perform rating on Tesla stock, which is the equivalent of a hold rating. Dorsheimer says this: Tesla shares may find new wind at their back following the successful pay package vote. However, the valuation is heavily dependent on robo-taxis. We feel the risk-reward is fairly valued at these levels, and we will look for incremental data points on the rollout. Appreciate the level-headed analysis on the always hype-filled Tesla. All right, AI darling Coreweave will report earnings after the close today, and that's why it's my stock of the day. I want to make this simple for you in terms of analysis. Super simple here. Coreweave stock is down 20% in the past month as investors fret over AI stock valuations. So the only thing I want to hear from Coreweave, and the same should go for you, is that AI demand remains through the roof. This stock craves positive information, and if it doesn't get it tonight, expect a brutal sell-off on Tuesday. There is reason to believe Coreweave could deliver on its earnings call. Here's what co-founder and CEO Michael Intrater told me a few short weeks ago on Demand.
The depth of the demand, the scale of the demand, the breadth of the demand is overwhelming the industry's capacity to deliver the compute that is required by OpenAI, by the hyperscalers, by the enterprise, by the sovereigns. It's just layer after layer of overwhelming demand.
All right, let's get the round table to weigh in. Art, that word, overwhelming, what I heard from Michael when I talked to him a few weeks ago, I need to hear that reaffirmed on this earnings call, especially in light of what TSMC said about slowing sales today.
Yeah, I think that's completely correct, Brad. I think the good news is that Coreweave is now coming into this report not at an all-time high. And that is what plagued most of the reporters in the third quarter reporting season. So a significant drawdown coming into the report sets them up for a beat and raise that actually has a response function post their earnings announcements that could be positive. It's all about what's in the conference call and the details of that overwhelming demand.
Art, how much of a, I guess, guide or a guide to the AI trade is Coreweave at this point? Is it a, I'm actually viewing it as a potential catalyst for this entire week for the AI trade.
Yeah, I wouldn't disagree with that. It certainly sits at the epicenter of moving from the invention of artificial intelligence and chatbots to the development of application of artificial intelligence. So it's that next phase that we're going through that gets us to monetization. So it's clearly important, certainly not as important as NVIDIA will be a week from now.
And as a direct read-through from Coreweave to NVIDIA earnings, of course, these companies are very, very intertwined.
Yeah, completely. I mean, I think that the Coreweave earnings, their report, is going to be sort of a litmus test on the AI infrastructure boom, and it is going to sort of is the spending merited, and is there going to, as you said, is demand through the roof? I mean, that is what investors want to hear. And as Art said, the fact that the stock has gone down significantly, especially last week during the sell-off, this bodes well if the company can put out results that please the street.
Also keeping an eye on AMD Investor Day here in New York City. I know Dr. Lisa Su will be in here presenting to various investors. Brooke, just staying on the theme of AI, last week was a significant sell-off. I mean, it wasn't just one or two stocks. Really across the board, we saw major sell-offs.
Yeah, we saw that major sell-off as the worst week of losses for the NASDAQ, led by these key Mag 7 and AI players since April. And the momentum that we're heading into this week, you pointed out earlier during this segment or before that these companies really need to prove the momentum within their earnings growth. I think it's worth pointing out that Coreweave shares sank more than 21% on the day after the company reported second quarter earnings, where they posted a wider than anticipated quarterly loss, and they gave that disappointing outlook. And so it's really just goes to show that these key players that have led this momentum, led this AI tech-driven rally that we've seen, especially over the key summer months heading into the back half of this year, these companies need to continue to show up, prove that they'll beat the street's estimates, and really give an outlook as far as how much they'll spend on AI that's in line or better than what Wall Street expects in order for this momentum, especially this momentum that we're seeing this morning, to continue.
Point of the day goes to you, Brooke. That is some good stuff. All right, let's keep it rolling here as we wind this show down. Does the economy only work if you feel good about stocks? That's one of the lead stories in the Wall Street Journal today that left me thinking. Consider this. Gains in 30 top AI stocks alone have added $5 trillion to household wealth across the country in the last year, according to a recent JPMorgan analysis. Federal Reserve data shows Americans gained more than $63 trillion in wealth from the first quarter of 2020 through the second quarter of 2025. Art, we've been, this is something that I've really been thinking a lot on of late, but really throughout the whole year. We're seeing a great year for the stock market, but the average household, they don't seem to be participating in it.
Yeah, the reason for that, Brian, is it's a bifurcated ownership of equity. So 62% of Americans have ownership of U.S. equities. But if you were to take that a step further and say, of those households that have more than $100,000, that number goes up to 84%. Of those households that have income of less than $50,000, the number goes down to 22%. So it's very bifurcated, and I think that's reflective of what we're seeing in the economy and consumers in general, in this K-shaped economy where the upper end, those that have more access to the capital gains and movements in markets, are continuing to drive consumer spending. The lower end of that is certainly the other part of that K-shaped recovery that we're going through right now. Just don't have that kind of flexibility and don't have wages that are growing faster than inflation.
Art, you think that cohort is in a recession?
That cohort is at or near a recession. If you look at that cohort and break it down even further, the unemployment rates for most of that cohort are twice what the unemployment rate is for the country. So it's certainly that part of the U.S. economy that's hurt the most, and then there's obviously reasons for that. But when you look at unemployment rates just alone, that cohort has 2x the unemployment rate that the rest of the country has.
Brooke, Art brings up a really good point. We've seen it through the prism of so many of these fast food results. Even Wendy's, I think, reported last week almost a 5% decline in same-store sales in the U.S. Their international business is doing better than their U.S. business.
Brian, what we've seen is this true K-shaped economy play out across retail, across fast food, even Coach tapping into Gen Z, while Gen Z can't seem to win over, or Kava can't seem to win over Gen Z. It's really this bifurcation that we're seeing across income cohorts, age groups, and really these companies trying to tap in to win big. For example, Wendy's might not have done well here in the U.S., but McDonald's brought back that extra value meal, that $5 and $8 price point, and that's resonating with low-income consumers. And so it's really about who's playing the best game here, who's leaning into value the most to gain these income cohorts that are clearly under pressure due to unemployment, higher rent, and also, don't forget, we had the return of that student loan repayments kick off back in April, and that is really hurting Gen Z right now.
Inez, thank God for the rich, right?
I mean, look, they're the ones that are spending, but definitely if you hold assets, you did well this year. If you held stocks, if you held metals, if you held crypto, you did well. And if you didn't have money to put in the markets, or if you put the money aside and thought, well, I'll wait for a better time to go into the market, you basically shorted the market. I mean, if an asset holder does well in this kind of environment. We've talked about the debasement trade before. We've talked, I know I've repeated myself over the value of money, but people see it. They go to the store and they see that the prices are higher and that their dollar can buy less. And so the only way to get around it is to buy assets and to try and get ahead of that inflation.
Yeah, one thing that has gone up is turkey prices. And as I put that chart out on X this morning, feel free to check it out. It's going to be a more expensive Thanksgiving indeed. All right, thank you, Art, Brooke, and Inez for being on the opening bid roundtable. Good to see you all. All right, hungry for more opening bid? Of course you are. I got you covered, though. Today on my Opening Bid Unfiltered podcast, a new episode with a former top investor at the Carlyle Group goes inside the world of defense stock investing. It was fascinating to chat with Brooke Coburn, now at Capital Meridian, about innovations happening to keep our country safe and how investors are backing them. You can give that a watch on Yahoo Finance, YouTube, Spotify, Apple, Amazon, and iHeart. Coming up, Julie Hyman has you covered on Market Catalyst, and we'll continue to get you ready for our big Invest event this Thursday. We'll be right back.